But how will these overnight cues impact our own markets? We have our research team joining in to tell you just that, what the trade setup is looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to both of you. Sudarshan, let me come across to you first up. Some positive cues today for our own markets.
Morning, so yes, well, the handover from Wall Street is slightly positive. US market has regained half of its losses seen on the previous day. The tech-heavy index Nasdaq, which had lost 2% Tuesday, has gained 1% overnight, and S&P is back above the level of 5,000. For our market, it was a session of two halves. In the first half, when we reacted to US CPI inflation, higher than CPI inflation, all the major indices were down somewhere in the range of 1 to 3%. But in the second half, the focus shifted to domestic cues, where we saw RWPI inflation coming at a 3-month low, and following that, markets staged a smart recovery led by banks, especially PSU banks and Reliance Industries. But there were two sectors which did not take part in the recovery. Those were the sectors which are more dependent on global cues, and those sectors are Nifty, IT and Pharma. Both these sectors were down 1% each, even at the close. For today, it seems we might have a higher start. GIFT Nifty is indicating a start in the green. Coming to institutional activities, it looks like DIIs used the fall seen in the first half to buy, whereas FIs used the recovery seen in the second half to lighten their positions. FIs sold shares worth rupees 4,000 crore, while DIIs have bought of rupees 2,900 crore in cash market on Wednesday. Talking about some stocks that have seen major delivery percentage on Wednesday, the first name is Bharti Airtel, where delivery percentage to traded quantity was at 75%, that is highest in a month. Second name is Marico, where delivery percentage was at 81%, highest in 3 months. And last name is Inox Wind, where delivery percentage is 85%, that is highest in at least a year, or it might be highest since its listing. Lastly, cues to watch, we have India trade data for January, expected around 3 p.m. and US initial jobless claims expected around 7 p.m. India time.
Okay, all right. So those are some of the cues we'll be watching out for. But Sudarshan, there is a long list of stocks as well. Fag end of the earnings season, what do you have on your radar?
We'll start with India Bulls Housing Finance. It was a weak quarter. Disbursements have slipped both sequentially and year-on-year. NII was down 28% year-on-year, down 8% sequentially. NMDC earnings were better than estimates. Margin is 200 bips higher against CNBC-TV18 poll. Volumes have increased 19% year-on-year. Glenmark Pharma distribution model change has impacted India numbers. Revenue was down 28%. Reported EBITDA loss of rupees 209 crore. Muthoot Finance, higher gold prices have aided growth. Earnings were better than estimates. NI has increased 12% year-on-year. Sun TV results were largely in line. Revenue has increased 4% year-on-year. Crompton Consumers earnings have come in below estimates. Margin has fallen 100 bips, but revenue is up 12% year-on-year. Gland Pharma revenue has increased 65%. Margin came in line with estimate at 23%. In other earnings, companies which have reported good earnings are Capacity Infra, GSPL, Hinduja Global, Genesis International, and companies which have reported weak earnings are Dishman Carbogen, Alembic. Remember, it's Alembic Real Estate, not Alembic Pharma, and last name is Narayana Health. In other news, we have Utkarsh Small Finance Bank. Company will evaluate reverse merger with holding company Utkarsh Core Invest. Paytm has issued clarification in which CNBC-TV18 Newsbreak is confirmed. Company says it has been receiving notices from authorities, including Enforcement Directorate. HUL companies in talks with Andhra Pradesh government to collaborate on palm oil production.
Okay, all right. Those are some of the stocks that will be on our radar. Let me go across to Nigel finally. He's joining in with all the cues from the F&O space. Hey, Nigel, morning.
Morning, Sonal. You know, yesterday it was the day of the Nifty Bank, recovered close to 1,000 points from the low point of the day. And as we mentioned yesterday in this segment itself, that it holding the 200 DMA is very, very important. And then breaking towards that 20 DMA. And that chart tells you the perfect picture. For the last, quite a few times, you look in January as well, multiple times, we tested that 200 DMA. And from there, we bounced up. So that becomes a line in the sand. And I'll tell you what, in the last 4-5 trading sessions, every day we have breached the 45,000 odd mark. But we have seen buying at around this 44,600, 44,800. Does it have more steam? That holds the key for today's trading session as well. What took place, though, yesterday? The institutional numbers actually were net sell, as we were telling you earlier. There was a short covering bounce that played out, both on the Nifty as well as the Nifty Bank. Both those two indices ended higher. And on the Nifty Bank, there was a big short covering bounce. But it wasn't the FIs who covered their shorts, because the FIs, they added more longs than short positions. They continue to remain net short with around 64% of their positions on the short side. On the options data, the 21,600 put and the 22,000 call, well, they were very, very active. And that's really been the goalpost. You know, the 21,500 on the downside, on the upside, the 22,000 odd mark. Can we break above this level? You know, I have a fair bit of confidence that the 21,400, 21,500 level will not break. Looking at the options data, looking at the texture of the market as well. But can we break above the 22,000 mark? Two key variables that you need to track. One is Reliance Industries. That's been the big outperformer, and it's been moving very, very well. Yesterday as well, that staged the intraday recovery. And the Nifty Bank, does it have more steam after yesterday's bounce that we saw? Put that together, you have more than 40% of the Nifty that we're talking about. So these two hold the key even for today's trading session. The GIFT 50 suggests a start in the green. Let's see if we can build on from there. But yesterday it was very, very encouraging to see the kind of bounce we had on the key indices. Back to you.
Okay, all right. Thank you guys for prepping us up for this trading day ahead.